Overall, the outcome of the survey is that people are more positive now than they were before. So 2/3 of the respondents to that survey said that they expected M&A to increase in the year ahead. 11% of those said they expected M&A levels to increase significantly. That's certainly the case within CEE too. There is increased optimism. Yes, there are questions over the Ukraine-Russia crisis and what impact that will have in terms of M&A, but overall 59% of respondents said they didn't think that would have an impact on M&A. So overall there is increased confidence, there is increased hope that M&A activity will increase in the year ahead. Particular sectors which are hot or are predicted to be hot are TMT, for example, pharma, energy in particular. Historically, I think you could argue that CE is one homogenous region in the sense that they all had something in common. They'd all come out of communism. They all had the growth story, the conversion story, etc., etc. But I think what we're seeing now is increased fragmentation within CE as a whole. So on the one hand, you've got countries like Poland and Czech Republic, which are pretty much on par with Western Europe now in terms of risk valuation, discount factors and valuations generally. Then at the other end of the extreme, you've got countries like Russia and Ukraine, which even before the crisis in Ukraine were risky countries. And then you've got countries which fall somewhere in between those two extremes, like Romania, for example, where we're seeing a lot more activity, Bulgaria, Slovak Republic, places like this, for example. I think it's certainly relevant, certainly from the perspective of private equity, for example, who look for growth opportunities. They look for a way to ultimately receive a significant return on their investment, and that implies growth. So if you're looking at a country which has a small population of just 2 million, it's difficult to see how you can achieve that growth just based on a country of 2 million which already has saturation. But so people look at opportunities to consolidate maybe across borders wherever possible. For example, this is in the Baltics, this is a driving factor. If you invest in one particular Baltic country, then people are saying, okay, what can we bolt on elsewhere in the region to maybe consolidate this and therefore increase growth and achieve economies of scale through that means. So they are looking at it, but it's not easy. At the end of the day, you've always got geographical boundaries in place which act as a certain limit to the extent to which you can ultimately roll up and consolidate cross-border. I'm not sure we're yet completely out of the woods in terms of seeing CE as being the success story as it was, say, 4 or 5 years ago from a private equity perspective, more than 5 years now, maybe 7 years ago. We're still not quite there yet, but there is a feeling that CEE as a whole has returned to some resemblance of normality, that the worst is hopefully behind us, and there is increasing interest for some of the big private equity funds that we've not seen before. For example, KKR coming in and investing a lot of money into CEE. That is something we're seeing for the first time in quite a few years, and it's a sign of increased confidence, I think, in the region as a whole.